What is good, everybody? Today I just made around $8,000 trading GBP USD, and the trade signal was sent out in my private Discord server. I took it and my students took it, and we all made money. Now I'm gonna break down the entire trade for you guys so you guys can understand what I looked for in the markets. Now before I start, I made a video about the strategy over a year ago, more than a year ago. And a lot of people somehow they copied that idea and they started calling it their own model. I hope that makes sense, And I hope you know who I'm talking about. But that's not the point, because at the end of the day, it's all ICT, and people have this crazy addiction of finding one's concept, giving it a completely different name, and then calling it as their own. I have never done that. I've always given credit to ICT, because at the end of the day, it's all ICT. So before I even break down the entire trade for you, what I'll do is I'll first of all teach you the entire strategy, and then later on in the video, I'm going to break down the entire trade for you guys so you guys can understand what I look for in the markets. So the strategy is very simple, and basically this is how the market operates, okay? So the very first thing that we have to do whenever we are looking to trade is we have to look if the market is going up or is it going down. This is very important, and it's like the most important part of taking A+ setups, okay? Now, this strategy uses two time frames. So one could be your higher time frame, and the other one could be your lower time frame. So we use higher time frame to identify the direction of the market, and we use the lower time frame to take our trades on. So for example, my higher time frame would be 4 hour, and my lower time frame would be 15 minute. And time frame alignment is very important. So let me teach you time frame alignment. So if your higher time frame is daily time frame, you should be taking your entries on the 1 hour time frame. If your high time frame is 4 hour time frame, you should be taking your entries on the 15-minute time frame, okay? So here is the strategy. Let's assume that price is going up on your USD, right? On the 4 hour time frame. So how do you identify the order flow? And that is very simple, okay? As soon as I open a pair or asset and I go onto the 4 hour chart or the high time frame, I should be able to identify the direction of the market within 4 or 3 seconds. If I start getting confused and I start asking myself this question, are we consolidating? Are we going down? Are we going up? Then that's where I move on to another pair. It should be very clean. It should be so clean that you will automatically know that the market is going up or down. I hope that makes sense. So let's assume that price is going up on your USD. Now, what you have to do is mark out a fair value gap. Now, as we know, price goes from external range liquidity to internal range liquidity, and from internal range liquidity to external range liquidity. All right. So we have a fair value gap over here, and we have taken out external range liquidity. Now, what we have to do is wait for price to come back into this 4 hour fair value gap. This is very important. Now, when price comes down into this 4 hour fair value gap, what we have to do is we have to drop down to our lower time frame. So in this game, the time frame alignment would be 4 hour to 15-minute time frame. Now, as soon as price comes down and dips into this PD array, high time frame PD array, we are going to look for SMT divergence on the 15-minute time frame inside this PD array, and in this case it is a fair value gap. You can also look for SMT divergences inside auto blocks, volume imbalances, and inverse fair value gaps, but fair value gaps are the strongest ones. Now let's say this is your USD. Now what you have to do is look at GBP USD, okay? So the correlating pair for your USD is GBP USD. Now, what you have to do is, let's say both of them have price inside a fair value gap, okay? Now, when you drop down to a 15-minute time frame, right? I want to see SMT divergence, okay? So let's say there is a lower low, lower high, lower low on GBP USD, but on Euro USD, we failed to create another lower low. So we have lower low, lower high, but over here we have a lower low, lower high, and then a lower low. Now that is SMT, but it is not confirmed yet, okay? So now here's the most important part. We will be trading the pair that is stronger towards being bullish, and over here Euro USD is being bullish. It is strong in being bullish. Why? Because it failed to create another lower low. over here, GBP/USD paused to create another lower low. So we have a lower low, lower high, lower low. It is showing momentum to the downside, but Euro USD is showing momentum to the upside. So we will be trading this because the higher time frame trend is bullish. So that makes sense, right? Now, as soon as you have a SMT divergence, right, what you are looking for is basically some form of confirmation. So that could be a market structure shift. It could be a change in the state of delivery. It could be an inversion, okay? So now we are on the 15-minute time frame and we have SMT divergence. Now all we are waiting from here onwards is we are waiting for some form of confirmation. So most of the time I use change in the state of delivery and also sometimes market structure shifts. But if you want to get in the trade as soon as possible, and that's what I did in today's trade, all you do is look for change in the state of delivery. Now what exactly is change in the state of delivery? Let's say there is a liquidity pool over here, right? So this is a low, and let's say that this candle over here, let me just do that. Just one moment so you guys can understand it correctly. This specific candle sweeps this liquidity. Now, when that happens, I'm waiting for price to close above the body of this candle. And let's make this a bearish candle, okay? Because it has to be a down close candle. So I'm just going to make it red. Okay, so a down close candle swept this liquidity. Now, that is your bullish auto block. Now, I want the price to close above it, okay? So let's assume that price goes up like that, and let's make it green, okay, because it is a bullish candle. Now I'm looking to take my entry on the retest of this auto block, okay? My stop goes here. So that is a change in the state of delivery. This specific candle swept this liquidity, okay? Now I'm going to give you guys some examples. I'll also break down the entire trade for you so you will understand it completely. Don't worry. This is just to show you how the strategy works so you guys can understand completely. I'm not hiding anything. I'm not gatekeeping anything for my mentorship or for my course. No, you get it all here for free. And I've uploaded this strategy over a year ago, almost 2 years now. And again, there are people out there copying stuff and calling it their own, and I don't care. Okay, so now all I do is I go for 1 to 2 risk to reward ratio. Simple as that. So what do we have here? Let's go back and just revise and get a summary of what is the strategy. Okay, so SMT divergence inside a key level, that could be a fair value gap, could be an auto block, could be a breaker block, and it could be inverse fair value gap. Now in this case we have a fair value gap, okay? GBP USD made a lower low, lower high, lower low, but Euro USD failed to create a lower low. Now once we have SMT here, we are looking for change in a state of delivery. So over here, somewhere around here, you will look for a candle that swept some form of low, okay? And I'm going to give you examples so you will understand what I'm talking about. Now once you have change in a state of delivery, you basically just take your entry and it's going to just fly towards your TP. Your stop loss goes towards here and you go for 1 to 2. Simple as that. Easy bread and butter model. Okay. Now I'm going to give you guys some examples, but before I do that, I will break down the entire trade that we took today, and I made $8,000. That is crazy. Okay, and this model can make you this much amount of money. So now let me show you what I looked for in that trade. Right, guys, so here is the trade breakdown. So when I open up the chart, I was looking at GBP USD, okay? And on the 1 hour time frame, which is the higher time frame for my trade, I noticed that price was in a very strong bullish order flow, okay? It was going up. I don't have to look at this price action or this price action. I'm just following the momentum. Okay, I don't need to become a scientist to depict where the price is going to reverse from this level. Okay, all I did was just mark out this fair value gap over here. So during the London session, we pumped up, right, and we formed a 1 hour fair value gap. Now, time is very important, specifically and especially when we are going to be trading on the 5-minute time frame. We should be trading during the kill zone hours. Our trade should be during that time, okay? Because without time, price is nothing. So let's just go. Let's go here, okay? Now, let it load. So now what I did, I went here and I opened up Euro USD, okay? And let's just go, I've already marked these out, but let's go here. Okay, so we have the same PD array over here. GBP USD and Euro USD. Now, if you look and notice what we have here, price failed to tap inside the fair value gap on GBP USD, but on Euro USD, price did tap into this fair value gap. Now the next step is to identify S&P divergence on the 5-minute time frame inside or at the fair value gap. So over here, what you can see is this is where, okay, so let me just mark this out like that. This is where we have SMT, and over here, I would say right there. Yep. So price failed to take out this low on GBP USD, but on Euro USD, we took out this low and we dipped deeper into this fair value gap. Now I had to look for a change in the state of delivery, okay, and very simple stuff. Over here, you can see that this specific candle, this bearish candle, took out this low over here. Okay, this low was swept by this bearish candle. Now the next step, I waited for price to close above this candle, and then we would get a change in the state of delivery. Simple stuff, right? Now our entry was on the retest of this auto block. Our stop went just below this low, and we simply targeted 1 to 2 risk to reward. We don't need anything else. I have always target 1 to 2 risk to reward because it is the safest, and it gives me and it keeps me profitable. So yeah, that was a trade breakdown. Very simple stuff. Identifying the order flow on your high time frame. In this case, it was 1 hour time frame. Then I look for my entry on the 5-minute time frame once we got SMT inside that PD array. So trading really boils down to these few things. You don't need a magic ball or a crystal ball to identify the next move. It's just identifying the order flow, marking out key levels, waiting for price to tap into those key levels, and then looking for SMT inside those levels. And then, yeah, of course, using your entry model, that could be inverse fair value gap, that could be a market structure shift, could be change in a state of delivery. Change in a state of delivery is a bit risky, but you get in the trade as soon as possible. And it doesn't matter what entry model you're using. In the long run, you are going to stay profitable. Now, if you are interested in live trading with me every single day and getting these setups where I send like exact entry level, take profit level, and stop loss level, there's a link down in the description. Click on it and you join us, and I think that can actually help you, but it's not necessary. What I've teached you right now is enough. See you guys in the next one.